What is up, my Forex for Beginners family? Okay, today's lesson is going to be another very important lesson. Today is about time frame and structure. So I just want to quickly show you that every time frame has structure, and sometimes I mislabel them, and I see some of my students sometimes do that. Just take some time and label it correctly. So we're just going to quickly, right now we're on the monthly time frame. We're just going to quickly label an uptrend and a downtrend really quick. So here we're going to call this a low, and we're going to call this a higher high, and then here we're going to label it as a higher low. So it makes sense. So make sure you go through this in your head. Just label it. Sometimes some people might label this as a lower high or a higher low. Just walk through your heads and it'll make sense. So this is a low, this is a higher high, this is a higher low. So this is the last low. So this is a higher low. So it makes sense. So, and then if you want, you can just click on this and go Control C on your keyboard, and then Control V, and it'll paste. If you want to copy and paste, you can do that on here too, or you can just use the text tool. And so here it made a, we can call this still a higher low. And then here it started to make it started a downtrend. It looks like a downtrend. So this would have been a lower high. And this would have been a, let's just call it a lower low for simplicity. It may have been not exactly, it closed slightly lower. Let's just call it a lower low for now for simplicity. And this is going to be a lower high and a lower low. So make sure you label it correctly like this, because it makes sense. Sorry, Control C, Control V. See, this is a lower high. So this was the last lower high. This is a lower high again, a lower low, lower high. So make sure you label them correctly. Lower low, lower low. This is a lower high. And we actually formed another lower low. So you can see that there's a structure in the uptrend, and then there's structure in the downtrend, and we're looking at the monthly chart right now. And why we don't trade off the monthly chart is because if you're looking at the data here, look, this data is from 2012. That's why each one of these candles is 1 month. So that's why, you know, if we placed a trade here, you know, or if we're looking at the data here, it doesn't really help us because we're actually in 2020. So when we're trading, we're only actually examining this part here. But what I'm trying to show you is that every time frame, monthly time frame that we're on right now, it always has structure. Every time frame has structure. But what was important here is if we were at this time and point, if like I said, the higher time frame structure or higher time frame data is the most important and the strongest data. So here, if we were aware of this lower high during this period, we could have sold and made a lot of money down all the way down here. We could have kept selling. Actually, this downtrend started here. I'm looking here in, you know, January 2018. And we're in 2020, so we could have been selling for 2 years just because we knew market structure on the monthly time frame. So I just wanted you to see that on the monthly time frame we have structure. And let's now move into the weekly. So what I'm going to first do is, so we don't get confused here, I'm just going to quickly erase all these these higher highs and higher lows. Quick way to do it is actually you just right click on here and go to object tree. You can actually delete things on your chart through here. So I'm going to delete all this text here because I don't want to confuse us when we go on the next chart. So see, I'm just deleting all this text. This is a good feature for you guys to know as well. It's called object tree. It shows all the objects on your chart. And let me minimize that. Okay, so now we're going to switch down to the weekly time frame. And I'm just going to right click on my screen and hit reset chart. And so we're going to start examining market structure on the weekly time frame. So you can see on the weekly time frame, we're, let's just start here. This could be a lower high and then a lower low. I know this lesson is going to get a little bit repetitive, but what I'm trying to drill into your guys' head here is that every time frame there's structure. Every time frame there's structure. Just let me delete that 1 minute. So every structure, every time frame has structure, and here, you can see it retraced to 100%. So right here, came down, retraced 100%, and on every time frame, just keep in mind we can always run Fibonacci, right? If you find Fibonacci retracement on a higher time frame, it's even more stronger data. So just remember that. So you can see that it came down here, found support here, and right here you can see it did not go past 23.6. And just a reminder that anything that doesn't surpass 23.6, so here as it fell quickly, it came up here, you could have known by looking at the weekly, we're on the weekly chart, that this is a lower high on the weekly time frame. So it's a higher time frame, so it's a stronger level. So you could have said, hey, it's being held at 23.6. 23.6 is normally a continuation, and look, price continued really quickly downwards. So again, when you're looking at structure on the higher time frame, pull out your Fibonacci retracement, because if you find a fib level on the weekly or monthly time frame, it's going to be so much more powerful than the lower time frame. So let's just continue here. So just don't be afraid to pull out your Fibonacci retracement and see what it shows you. So you can see here, we're finished marking up the weekly. So the weekly, you can see that there's, a lower low, lower high, lower low, lower high, lower low, lower high. This was 100% retrace. It did not break structure. This could have been a fantastic selling opportunity, because we approached a monthly level. We were at a lower high point. We made a double top. This monthly level acted as resistance, and we dropped down. So you could have sold here, and it was so obvious that that we tested this level before. It was so obvious at this level we either we're going to find support or resistance and then run away from it, and we did. And I spotted this when I started studying this for you guys. I started only studying this pair for you guys because it's actually a great pair to learn on, and I only started studying it because I asked myself, what pair can I teach my students and that they can master? And if you follow my lessons and master this one pair, you will know how to analyze any pair. But we first have to analyze and focus on one pair, and together we're going to be analyzing AUD USD. So stick to analyzing this pair, and then once you graduate, you'll be a trader and you'll make your own decisions, and you can do whatever you want. You can study anything you want. You'll know how to study. Okay, hold on. Let me get a drink of water. Okay, and now again, let me let me delete this tool and let me just maybe put a box around this level here. So between this lower high and lower low. So we're going to drop down now to, from the weekly time frame, we're going to drop down to the daily. So let's drop down to the daily. And now that I drew that box around, you can see that within that structure, between that on the weekly lower, between the lower high and the lower low, we now have structure within the structure. So we'll call this a lower low. Let's just call it a lower low. Call it a lower low. This here, it tried to see how it tried to break above this point, but let's just call it a lower high for simplicity. But it was like a failed breakout. It tried to go above here, but it made a lower high. And copy. Then about here, it made a lower low. A lower high, a lower high. So do you see how structure is being maintained within the structure? So we just examined we were on the weekly. Now within the weekly structure, we're now on the daily time chart here. We're on the daily. So you can see within the structure, there's structure. There's always structure. I want you guys to have this drilled into your head, that no matter what time frame you're on, as long as you're not getting too far of a time frame or too low of a time frame, I'm gonna have a different lesson on how to use the lower time frames. So like the 1 hour, the 30 minutes, the 15 minutes, even the 5 minute. I'll have a different lesson on this. But right now, we're just gonna study market structure from the monthly all the way down to 4 hour for now. So let me just continue here. And so you could basically see, I don't need to draw it anymore, but there's structure within structure. So if we drop down to the 4 hour, let's quickly drop down to the 4 hour. Let's examine just between, actually, sorry. Let me delete this 1 second. So let me just draw a box around this. So, and then let me zoom in. So you can see within here, we're making a lower low, oops, lower low, a lower high, a lower low. We're dropping pretty quick here. We made a lower low, and then, sorry, 1 second, a lower high. But anyways, you're getting the point here. You see that we're constantly maintaining structure, even within the structure. So no matter what time frame you're looking at, just know that there's always structure. There's always either we're making a lower low or lower high, a lower low, lower high, or a higher high, higher low. That's always being done. So practice looking up structure on all the time frames, and if you note anything on the higher time frames, just know that they're going to be the strongest levels. Okay, thanks for watching, and now practice that on your charts. Thanks.